Good morning, everyone. Today is the 2nd of September, Tuesday. We are getting a big breakdown in the markets today. And one of my followers asked if I could explain Fibonacci extensions. Now, Fibonacci, as many of you are well aware, is what I believe to be the core construct of all market price activity. I've talked to you many times about price being the ultimate indicator and how I use Fibonacci, Tesla, and Gann theory throughout most of my analysis. And it really comes down to three things: time, price, energy, in terms of what goes on through price. So you can see energy expulsion in these moves accelerating upward and breaking ranges. It doesn't matter, what interval you look at, daily, weekly, monthly, 10-minute, 2-minute, 10-second. You will always be able to rely on the fact that you have time, you have price, and you have energy. And energy is measured in various forms. Now, I've tried to measure them myself with proprietary indicators. I've tried to do quite a bit of research. I've shared quite a bit of my research with you. I'm digging much deeper over the last 2-3 months into energy wave cycle structures. And if you really wanted to have a little fun, you could turn around and take a look at a Rodin vortex coil. Okay, a Rodin vortex coil. You can even find videos here from Marco Rodin, the original guy that created it, is based on the concept of Tesla 369 structure. So understand that the Tesla 369 structure, which was divulged by Nikola Tesla, almost a century ago. Here's some examples of the 369. And Tesla was suggesting that if you understood the power of 3 and 6 and 9, you could understand the universe. Now, I'll give you an example here. This is an even more complex 369 structure. So now I want you to understand that these structures, okay, are what I believe are core elements to actual price activity. And the Rodin vortex, you see this whole concept here? Well, imagine the Rodin vortex. When we go to images, a Rodin vortex is essentially a structured mechanical component. Okay, so you see these structures, how the 3, 6, 9, 6, 9, 3, 9, 8, they basically move through these cycle structures. And you know what these cycle structures are? They're Tesla 369 coil structures. So what you're looking at is a never-ending cycle of 369 structures. Okay, and this is essentially what I believe drives all market trends, with one or two variants. And those variants are that we are dealing with a fractal mathematic structure. The amplitude and or frequency of energy can change. That can change price structure, can change what's going on, can change how price trends, and can change what to expect in the future. Now, once you start understanding that this is the core structure, this is the advanced three-dimensional structure, these all tie into energy, and energy as a measurement. Now you've got to start trying to apply some of those techniques into Fibonacci. So we all know about Fibonacci retracements, right? And move this down. And, you can come into any range and you can measure an up or down range and get Fibonacci retracements. I can measure this. I can measure this. I can measure this. I can measure this. And again, the structures themselves are dependent on Where you pick your highs and where you pick your lows. They occur everywhere, literally everywhere on the chart. Most people get in the habit of saying something like this: well, we had the deep low down here and we had the extended high up here. And look, Brad, this is the Fibonacci level. Yes, I get that. My concept of Fibonacci is that once we extend beyond, say, the 52 or 382 point range, you start running into secondary Fibonacci structures over here, and you would start to pick lower lows. Like in this point, this now becomes a secondary Fibonacci structure here. 1 second. And why do I like to use this secondary Fibonacci structure? It's pretty simple, guys. Let me get rid of this and I'll show you. If I'm trading off of this structure and I am defining this as what is called the defense zone, and then I also define this as what's called the defense zone for Fibonacci. Now, with Fibonacci, this is a damn big range. Pardon my language. This is a very big range, and it becomes unreasonable for me to sit here and think that, well, if it gets below this, it's going to come all the way down here before I'm going to make a decision. No, that ain't happening. So what happens is as we extend higher beyond these ranges, so you map this area, and as we continue to push higher and see this zone of consolidation through here below the 618 level, we finally accelerate up into this zone. Once we start getting up into this zone, I would look for example, this low and say this low is a sufficient low that gets cleanly down here near this defense level. You can see the defense level right here. And that makes sense that, hey, we bounced off the defense level. We rallied. That's a clear low. So I can come right up off of this low and draw another Fibonacci like this. And what I'm doing now is now I have a secondary or a third defense level here. Now we rallied right up out of that. This becomes our fib level. You can see how these fib levels 50, 382, and 715, they all coincide right in this area here. Whoops. And draw a line. So you can see here how this level becomes critical. And just so happens that that level also coincides with this pullback from August of 2025. Sorry. Yeah, August. This was earlier. So that's my real kind of line in the sand. We get below that level and we're going to come down here or here. Now I can tell you that these will point out target ranges here, target ranges here, and target ranges here. Okay, so now you're learning how to use Fibonacci extension. We're defense level here, defense level here. Now, we've broken through these defense levels on a big downward trend with fairly heavy volume. What's going to be, Brad, what's going to happen now? Well, Fibonacci price theory, you understand Fibonacci price theory. I've done many videos on it. New higher closes or higher highs, lower lows tells us that at this point on a daily chart, we come over here, we spread this out. Do we have any breakdowns of any intermittent or intermediate, what are called standout lows? This is an intermediate standout low right here. This is a second standout low briefly right here. This is another standout low right here. We have no standout lows here, just a series of lower lows down. We have another standout low right here. I call these with just a little single intermediate lows. And then we have a standout low back over here off of this low. So these are our defense levels. Because we've broken down below this standout low right here, we are technically in a short to intermediate term downtrend right now. because we had not seen any standout lows over here. And the only other standout low we saw was right back over in this area. This was all rotation. And you remember, I warned in this area that this looked like we were getting rejection and potentially topping. Now, do we need to see a breakdown below these levels to confirm this downtrend? You bet we do. We need to see price continue downward in order to attempt to make these lows and to continue the downward price trend. We do have confirmation right here. I'll make this purple or red. That's a solid confirmed downtrend. Okay, we should be at this point looking to target this lower zone here. 21,750, 21,000, almost 22,000. You can see the numbers right here. That's my little defense zone right there. If we fail, we will move back up above this defense zone right here. So if we fail in this area, we will reject at this area and move up. If we continue, we will likely move down to this area in the defense zone. Okay? That's how Fibonacci zones work. We can fail at any one of these middle levels as well, but generally price runs to these defense zones, in my opinion. Now, Fibonacci extensions are a bit different. The way you operate Fibonacci retracements is you're typically looking for a moderate pullback and extension beyond these defense zones. So when we get above this defense zone, like right here, this is pretty clear upward trending. Now, we don't know how far that trend is, but I'm telling you, we can come off of this high down to this low, and we could measure the defense zone right there versus right here. Which now you understand why when, and this was my error, not thinking we could go higher, but we did catch the move anyway, right over in this area and this area, I started warning of a potential major top. It was early, yeah. It didn't happen, yeah, I get that. Okay, but what also it was very clearly running into this defense level. So in my opinion, we had a high probability of a rollover downward trend taking place at this point, which never happened. But still, technically, these were extremely good potential sell points related to where the market was. So now I'm going to eliminate all of these zones, and I'm going to teach you a little bit about Fibonacci extensions. So if you follow my analysis, I'll go way back out over here. Okay. In fact, we'll go weekly just for the heck of it. If you follow my analysis, you will understand that, well, you don't have a whole lot of data here. That's fine. I consider this a big wave 3 move. I consider this wave 4, and I consider this wave 5. Okay. Now, where we're at with this wave 5 move is that we're in wave 1 of wave 5. And I believe what we have in this wave 1 of wave 5 is that we've got the A move here, potential B move here, potential C move here. Okay. Now, that is dependent on a number of things. So that is dependent on how we count these potential moves. We have this moderate pullback here. We had a number of pullbacks here. And in reality, the true count, in my opinion, is A, B, C, D, E. And the reason this makes so much, is so important for you to understand, is look at, again, these ranges. Where did we get to? We got right into the defense zone. Oh, Brad, interesting. Yeah, where did we get to? From this low to here, we came all the way back below the defense zone. moved all the way back into that 618 and 50 levels, which were telegraphed right back over here, stayed away from this lower defense zone, and now we're moving higher. So what we have here is an A, B, C, D, E of wave 1. This is wave 5, 1, E. We're in the middle of an E, an ending pattern. And E can be as long or longer than C, but typically ends up being about 618 of C. So now, how can we measure 618? Well, you got to come right up to here to 0, come down to 618, drag this over here, and you can see that we're well above the 618 level, and we're probably closer to the full range here. Yep, pretty darn close to the full range. So now, again, we come in here, we draw another Fibonacci retracement from here to here. We've already done this. We have our defense level here. This is weekly, remember, and we have our defense level here. And what this is suggesting is that if we get a breakdown here as wave 5, considering this is wave 5, wave 1 of wave 5, which consisted of an A, B, C, D, E pattern, potentially reaching up into this upper zone, failing just short of that 100% measured move, be like a 97, 94% move. And if we were to break down, we would be watching this breakdown level right here, indicating that we're going to come down potentially at this level or this level. Now, this tells you that, whoa, Brad, that's big numbers. Yeah, it is. It's a 24 to 35% correction to stay in this range. And again, ultimately, we could come all the way down even deeper. But these are the primary objectives with regard to the Fibonacci defense levels for a pullback. And this would lead us into a wave 2 correction. Remember, this is wave 4, end of wave 4. This is end of wave 3. And this is wave 5-1. If we were to get a downward correction like this, this would end up being wave 5-2, meaning the pullback of the initial wave 1 of 5, leading to a massive potential expansion up into this area. So now, Brad, how high is this expansion potentially going to go? Well, now we get to have fun, okay? Now we get to come in here and use Fibonacci extensions. And extensions, first thing I would do is I'd come down off of this low, up to this high, coming down to a hypothetical low point somewhere in this area. And now you're looking at typically a 100 to 150 measured move. So you're looking at this to this as a potential measured move. Now that's off of this potential low right here. So I come over here, click it, I'm off of this low. If we were to get a little lower, I would be looking at a 100 to 150 target. Now, let's try it from a different angle. Okay, I will come here from this 4 point. Well, let's take a look here. We got the low here, pulling back. See, yeah, this is really the safest way to do this without getting all of you confused. So, and then we'll just come up here and we'll go up to the highest projected point. And your 1 point would be here, and your 1.5 point would be here. So what you can see is the projected pullback ranges. Price is telling us these ranges. So look over here. Forget about that. So look, forget about the projection. Forget about where we think it may or may not go. Price told us directionally that we had these zones over and over and over again. We knew that these zones existed, okay? And we knew that by simply measuring price move. And remember, this is weekly. I can go down to 10 second and do this. We knew that these zones existed, and we knew that these were going to end up being potentially some sort of a support resistance zone moving forward. Now, as we enter into this breakdown period, which is starting to move into a solid breakdown, we know where the defense level is, 22,000. We know where our targets are down in this area based on these defense zones. This would represent a big, broad wave 5-2 pullback, which would then extend into a potential basing bottoming pattern throughout 2020, early 2026. Remember, I'm drawing these, and remember, these could be, more like this. I don't know exactly how it's going to be, but, we have to, if this is wave 5E, the end of the first wave rally phase, we have to get into a pullback. And in order to get into a big, broad pullback, we have to come down through this cycle. So understand that in theory, in order for price to move through this trend, we would have to move down into this layer here, which is right here, right where I drew. And we would have to get below this layer here, which would be our big breakdown zone. Anywhere in between these areas is fair game, fair target zones. I think that this target's more likely. Right now, I don't think we see this big deep pullback, although we could. Knowing what's going on in the market, knowing that I believe we're going to see global kind of contagion, we could see something like this stalling out into 2026, 2027 before we get that big rally. So we could get a multi-stage low breaking down. I don't think it's going to last, but through maybe July, August, September 2026. But, I don't know. I could be wrong. I could be right. But now, once we know the low zones, now we can estimate the extension zones. And the extension zones are very clear in the sense that we're going to get that theoretical 100% move. So now we have to do a little checking. And the checking basically boils down to this. If we get into these lows, these moves up have to be bigger. So let's do it this way. This is wave 3. Wave 3 has to be bigger than wave 1. This is wave 1. So if my analysis is correct, wave 3 has to be bigger than wave 1. I can copy this to any of these low points that I think are going to happen, and that will tell me that my objectives are really up in this area. I can copy this down to here and tell you that my objectives have to be in this area. And I can copy it even further and tell you that my objectives have to be up in this area. So ideally, depending on where we hit this low, based on this extension, we're going to go ahead and see whether or not we've got that full 100% measured move to the upside. Now, the other number that you want to watch for is the failure zone, which I'll come in here, which is 618. So failure zone right here. That's, I'll draw that in red. 618 is where typically, if price cannot get above this 618 level on an extension after a pullback, we are going to fail. It may get just above it and roll down, but we are going to fail. So now, depending on where the lows are, that's that low. Here's that low. So 618 would then be right here. 75, 618 would be right here. And if we come over here and drag this down to my deeper low, 618 would be right here. So if, depending on where the lows are, we fail to get above these 618 levels, then we are going to roll. Price theory tells us that we are going to roll. So off of this low, if I were to come up here and fail to get above this level, it's going to roll back down. If it were off this level, rallied up here, failed to get above this level, it's going to roll back down. Same thing here. If it rallies up, fails here, it will roll down. Okay, so you have to look at these kind of as expansion, contraction of energy. If it fails at 618, it's more than likely going to roll back down, try to find support, maybe even deeper lows, maybe rolling into some kind of a base or flagging and then rallying out of it. So you're teaching you that, the 0.618 extension is a make or break structure. 1.0 is extension, is default measured move. 1.618 is extended move. Now, the defense zones also come into play here. As we expand, you have to see these lows, and you have to realize that we could see defense zones up in this area, potentially somewhere in this area here, or I gotta look these up here, right here. So look at how that sets up, okay? Based on this low, coming down into this area, this lower price area right here, based on the Fibonacci extensions, based on the potential rally, and again, even if I were to move down to these lower areas and readjust these defense zones, you find them over here, it still tells us a price target right here, 17,400, 17,000, 16,700, 18,200. So this confirms that my price predictions potentially of a low in this area, call it 16,400 to 18,600, from where we're at right now at 23, suggesting that we're going to see maybe a 25 to 32% contraction is very, very valid. So we're looking at a minus 25% to minus 32% downward contraction for wave 2. So now you're starting to learn how to use Fibonacci in a way. Now it looks confusing, right? But it's just 3 simple techniques: using the defense zones, measuring price efficiently, and using the extension, make or break, and default measured moves up to the upside. Understanding that we're using the same process here for these defense zones coming down. The most logical target is where they kind of cluster right here. So really, the way I see clustering of these defense zones, it's kind of here, and then here, and then here. So really, this whole zone sets up my pullback zone from these upper highs. And if it fails, if it never gets there, fine. But I'm going to tell you that we are in wave 5 of wave 1 of wave 5. We're reaching a peaking pattern. We have very little room to the upside for 100% measured move, dying here or the trend ending here at a 97, 94% pullback. You know what? It's not the end of the world. Seen it happen before. Could easily happen. So I hope this helps as far as how I learned to use Fibonacci extensions. Fibonacci extensions, again, remember, if this is wave one, and this turns into a pullback wave two, wave three must be bigger than wave one. That's why I measured wave one. I don't care about any of these other sections. Wave three must be bigger than wave one. That means that I am guaranteed to be able to be up in this area, somewhere up in this area as a wave three expansion. So wherever we low point here, I guarantee you, it's going to be at least 100% measured move of wave one. Gotta be. It might be 1.15, it might be 1.328, might be 1.618, but it's gotta be at least bigger. It's gotta be bigger than wave one. Okay, guys, I hope this helps. There's a lot more to this. And again, you can't learn it all overnight. It takes some kind of remember, I've been doing this for 35 years, studying the market, studying candlesticks, trying to build trading systems, building code for clients. The real reality is, you got to learn interpretive skills that are just not taught in 20 minutes. You have to really apply probably 8 months to maybe 2 years of your skills to try to do this efficiently. Learn from your mistakes, and you'll start to come up with some techniques that really work. I'm showing you what I use, which I believe are techniques that really work. So, in that way, I guess I'm giving you a head start. Okay, guys, hope that helps. Talk to you later. Bye.